Welcome, you're watching India Market Close, and what a fabulous start to the week it has been. If anyone thought that the rally would be losing steam, you'll remember in the penultimate week 3, the election results, which is the big event right now, well, they were clearly mistaken. Nearly 100 points up on the Nifty, sitting pretty above the 23,000 mark, if I may say so. Even the Sensex above 75,800 at this point. I just want to pull up the indices because, yes, you definitely have the Bank Nifty as the star of the show. 50,000 on the Bank Nifty doesn't look that far right now, about 1.5% up. But let's pull up all the sectoral indices just for a second to show you what's working. PSU banks have come into their own today, because if you're looking at the Bank Nifty and thinking, well, today is a banking day, very specifically it's a PSU bank day, nearly 2% up on the PSU bank index. Realty stocks doing well. It's all about BSFI. IT not bad either, frankly, after showing not too many signs of life. So overall, you have a good situation going. I'm just going to quickly pull up advanced decline to show you the breadth of the market today and what kind of a day we have been seeing. And you can see on, broadly, right now your declines are over advances by a tad, but broadly you've had a fairly decent day. Your mid-cap and small-cap indices as well. Let's pull that up and see if they're showing the kind of josh in the Nifty and the Sensex. The Nifty mid-cap 100 definitely is about 1% up. And the small-cap index is also not doing too badly. Time now for the heat map to show you what's really moving this market, at least as far as the frontline stocks are concerned. And Divi is there right on top. Divi's is definitely a stock of the day. In fact, the whole pharma clutch. There's a couple of companies which have had fantastic numbers. I would add Torrent to this as well, Glenmark as well. Fabulous numbers that have come in a space which has seen quite a bit of pain. So Divi is 4% up, and then the rest is all your BFSI space. Indocin, Axis Bank doing well, Adani Ports because of that inclusion, dual factors inclusion in the Sensex as well. As news flow coming in, Bajaj Finance, HDFC Bank, SBI up about 1% today. So a great day over there for this entire space. On the losing side, you have Wipro, not in the Sensex anymore. Adani Enterprises was supposed to be in the Sensex, but then it was Adani Ports instead. So maybe a bit of profit booking there. Grasim, ONGC are some of the others. NTPC actually started off fairly strong on the back of their numbers. The numbers for the quarter have been pretty decent, but seems to have faced a bit of profit booking there after a good run up. I just want to pull up Nifty contributors before I hand off to Harsh for what's happening in the broader markets and the big stories there today. And it's HDFC Bank all the way. I mean, just look at the entire top 3 and private banks also coming into their own. HDFC Bank, ICICI Bank and Axis Bank. RIL in that sense not having a great day, despite news that they're now including their telecom foray into Africa, but it's not really fired up the stock. Overall, I don't think anyone can complain. Harsh, we've seen 23,100 and back today, so already a very exciting Monday and exciting start to the week.
Absolutely, Tamanna. You're looking at some specific stocks also which are really doing well in terms of action. Let's pull up something like an Ashok Leyland up 7% odd. You have Exide within the auto pack, and I'll stick to that just for these two. The way in which those two are doing, 4% up on Exide, 7.5% on Ashok Leyland, doing extremely well. We did speak about the Pharma pack in terms of some of the results-oriented stocks. But let's pull up even within defense. Something like a Cochin ship is doing very well, continues to do very well. So essentially that rally seems to continue. In terms of some of the losers, let's pull up something like a Colte Patil down 6.5%. Sun TV, outside of the fact that the Sunrisers have lost, is down roughly 3.6% on the back of, again, numbers and results. And let's also pull up a few more. Paras Defense is up nearly 5%. AFL is doing very well in trade, up 3% odd. You also have a DOMS, which is up 3 odd % almost, and Bosch also doing fairly well for itself in trade today. Again, among the positives, Nazara Tech is up and away 6.5% higher. JM Financial is up 5+%. Mind you, Nazara, there's also some promoter sale which has happened, roughly 3 to 4 odd percent in terms of stake being sold to Plutus Wealth, and that's probably one of the other reasons why that stock is up and away in trade. JM Financial also up 5% on the back of strong numbers. One stock on which numbers are awaited, 1% up, LIC of India. That one has done very well over the last month or so as well. So keep your eye out because the numbers are expected to be quite strong. Your VNB margins are expected to be above or north of the 17% mark, which is very strong for a company like LIC. And you could well see some move on that one through the rest of the week as well. So keep your eye out on that. HUDCO also up 2 odd percent. And losers are also in equal measure. Let's pull up a PNC Infra. Let's pull up a Borosil. We spoke about a Sun, but let's pull up a Manappuram Finance, down roughly 2 odd percent as well. Orient Green also down roughly 5% in trade. So plenty of movers to speak about. A Bama Lorry is down 5. A Divgi Talk is down almost 6%. A Shelly Engineering also seeing a move down around 3 odd percent. So plenty of movers, honestly, in the broader markets to talk about, Tamanna.
Yeah, I would say a good day. And, you spoke about Exide, Ashok Leyland, two interesting stocks and good brokerage notes over there. To talk of the whole pharma story is buzzing today. Realty is doing well. So you've had a good day overall. Can it sustain is the question. Aditya Shah, Hercules Advisor, is with us on the show today. We're speaking with Hemen Kapadia as well of Care Choksi, giving us the tech view. Hemen, good afternoon. Let me start with you. Let me start with the indices, Nifty, Bank Nifty.
A very good afternoon, Tamanna. Thank you for having me on the show. It is a pleasure. Well, we've taken it, the Nifty has taken its own sweet time, Tamanna. When we took around 10-12 weeks between 21,800 and 22,769. We finally broke through on the upside on last Thursday, and now we've sustained above that. Everything is hunky-dory except for the fact that it is expected in the sense the VIX is 23. Last time the VIX went to 29. The last in 2014, the VIX went to 39. So from that point of view, the VIX still has space to go on the upside if past history is anything to go by. But yes, I think everything is doing well. Bank Nifty was playing a laggard. It's catching up. We're almost close to all-time highs. So everything is hunky-dory. We have a weekly expiry, we have a monthly expiry, and we have the results next Tuesday. So everything is good, but slight note of caution. One needs to keep in mind we are sitting on top of phenomenal rise and major event risk is coming into play. So cautiously optimistic. Nothing on technical parameters suggests any sort of weakness yet. In fact, on the opposite, it's showing strength. So I would say fingers crossed, things are looking good. But
we need to cross those fingers because India VIX already about 7% high right now. So you're seeing, I don't know, I'm not very sure what you're seeing exactly, Hemen, because the way you've described it, and actually so, this is a volatile week. But this is a market that is just simply, completely all in when it comes to optimism on Indian stock markets. Maybe it's the election results, maybe it's beyond that. I'm not sure what it is, but definitely complete optimism there.
Yes, on the playing a devil's advocate, Tamanna, I can say that it's all in the price. All positives are in the price. Having said that, there were a few stocks which were playing hooky in the sense we didn't see participation from one. Reliance Industries, 15 weeks, Reliance did nothing. And for five months, Adani Enterprises did nothing. And Adani Ports was doing well in patches and now has gone all the way. You have IT, which was also doing well. We have FMCG doing well, Pharma doing well. Frankly speaking, Tamanna, VIX is up, markets are up, defensive is up. Something has to give. I'm not sure what. But for the time being, I don't think any logic is required. Everything is good till levels don't break. I'd say great. Yeah. But once again, a little bit of caution at higher level. I mean, there are no level less. We are at all-time highs, Tamanna.
Right.
But coming closer to next Monday, Tuesday, okay, we'll probably do a show next Monday, Tamanna. But I'd say just a bit watchful. Quality is important.
Yeah. Next Monday, a long time between today and next Monday, because by next Monday you will have exit poll numbers as well. Market might, be in a even more euphoric mood, or maybe not. We don't know. We'll have to wait till 1st of June in the evening to know. Aditya Shah also with us. Aditya, very good afternoon to you. It's I would say a broad-based kind of a rally that we have been seeing. Clearly 23,000, no skin off the nose. Maybe we'll see a bit of profit booking here and there, but nothing too dramatic. Now, is this a time to come in with further gusto, you think?
Good afternoon, Tamanna. So as Manish Chokhani really says, and I would like to quote him, that India is going to be the bubble market for the next 20 years. The valuations are extremely aggressive across the market. Maybe some pockets are there where they have short-term problems. There the valuations are a little bit cheap. But overall in the market, the valuations are aggressive. But that does not mean that you don't stay in the market. You have to stay invested, because the market can continue to keep moving up and then give up 5 to 10 or 20% correction. So you have to stay invested. You must not go all in. You must space your investments in terms of an SIP or a slow and steady accumulation of stocks that are there. The India growth story is continuing this election or no election. The India growth story is there for the next 5, 10, 15, 20 years. So you must stay invested in high quality stocks. And this is not the time to speculate in junk quality stocks. You must have a company where the cash flows are really strong, companies where the business is really strong and the management is really strong. So overall, bullish on the market. However, we are cognizant of the fact that the valuations are extremely expensive, and you must be really careful in not taking very aggressive bets.
Okay, Aditya, the top sectoral gainer is surely the Nifty Bank is the financials, which are basically aiding markets higher. So let me try and stick to that. And your opinions on financials are also widely known. So want to try and understand as to what's really driving, what are the factors in your view, which is driving the financials higher and keeping them in focus in this market?
So Harsh, I read a very interesting article today morning that out of the 26 listed banks, about 24 of them have a gross NPA number of less than 1%, which it has not been this good for the financial sector in the last, I think, 40, 50 years. Bank balance sheets are absolutely very clean. Credit can flow into the system. The economy is very resilient, and there's demand for credit all around. So these banks can continue to grow at least by 10 to 15% their earnings over the next 3 to 5 years. And that is what the market is very optimistic about. And as the economy needs to really grow, credit must be pushed into the system. So we have seen a leg of PSU banks doing really well. We've seen a leg of small private sector banks doing really well. And now it is the turn of large private sector banks, where they have not done anything over the last 2.5, 3 years. They will also start to do really well as the credit cycle really moves on. So I feel that the leadership of the market will slowly and steadily come back to banks, which seen in 2018. Banks were the clear leaders, and after that they lost leadership because of XYZ number of reasons, like the NPAs coming about, the IL&FS crisis. But now we are seeing that the banks will come about, and we will see over the next 3 to 5 years bank earnings making a comeback. So positive on banks, especially on large private sector banks, which have taken a beating in terms of valuation over the last 3 to 5 years. Less so on the PSU pack. On the PSU pack, you must concentrate on the larger banks like the likes of SBI or a Canara Bank. However, the large private sector banks is a place to be.
Why now is also the question that we were discussing, Aditya. Some of the reasons are the RBI's bonanza, etc., elections. But does it explain the kind of up move we're seeing today?
So Tamanna, what we are really seeing right from 2023 is that we have a strong credit upflow. So when there's a strong credit upflow, first the PSU banks tend to get re-rated, and then the smaller banks which have undergone a massive beating, they tend to get re-rated. Now in the next leg of the cycle, the stronger ones, they are going to get re-rated, because the market will now feel we have political certainty after June 4, and now the government will try to take several measures to boost spending in the economy, and boosting of spending in the economy will directly mean flowing of credit into the economy. So I feel that over the next 3 to 5 years, we will see at least 10 to 15% each year of credit growth that will flow into the system. And the stronger banks are the ones who are going to lead them. For example, an HDFC Bank or an ICICI Bank or a Kotak Bank, or within the PSU pack, the SBIs and the Canara Banks of the world. So they are going to lead it. And the earnings are going to compound at least at the rate of 10 to 15% for each of these companies. And the silver lining is RBI has been so vigilant that it has been checking the systemic froth that is being created into the system. That will only mean elongation of this bank credit cycle. So overall, ingredients are in place for the bank Nifty and especially some stronger banks to lead the market higher. Banks which are really a big part of the Nifty, like HDFC Bank or an SBI or a Kotak Bank. So I am really positive on it. And going forward, you should create a basket of these stocks.
All right. I was seeing a piece today as well about how actually Tamal has done this piece. Tamal Bandopadhyay, a very well-known banking journalist, about how of 26 listed banks, 14 private, 7 public sector and 5 small finance banks have less than 1% net NPA in March 2024. And he points out, when did we last see such robustness in the Indian banking sector? Well, that's definitely a fact. And that may be beyond the reasons why we're seeing the move in the market, but no doubt. But the focus not just in banking today, it's also on pharma. Pharma earnings have surprised on the upside, whether it's a Divi's Lab or a Glenmark or even a Torrent Pharma, which have seen pretty good numbers. Varsha is joining us to speak on it. Aurobindo Pharma also had good numbers but plunged in trade, perhaps because of the FDA inspection and the outcome of that, Varsha.
Yeah, so you're right, Tamanna. So today is Pharma Day, so stocks are buzzing on the back of earnings, except Aurobindo. We'll see the reason for that. So starting with Divi's Lab, wherein profit did beat estimates. Now the reason for the good earning growth, where their custom synthesis segment is actually driving earnings. Custom synthesis is where you make product exclusive for someone. Improvement in margin is led by better product mix because of growth in custom synthesis. Now the generic business, which is 41% of revenue, owing to pricing pressure, dipped 7%. Now, company held a con call. So, what the con call highlights are, they're going to expand in CDMO business and they're going to launch 2 new projects. Also, their Kakinada facility is expected to start in Q2 or Q3 of FY25, and Divi's is planning to supply several molecules over the next 3 to 5 years, which would aid growth. Also, Divi's is backward integrated, which is likely to be a key differentiator versus peers, and they are expecting double-digit growth. Then we have Glenmark Pharmaceuticals, wherein revenue was up only 2%, but if you see EBITDA is up 26%, while margins were 16% versus 13%. But company did post net loss of 1,218 crore on the back of higher tax. Now, if you see the key highlights for the company, India business grew 12.9%, North America revenue decreased, but the stock is buzzing on the positive con call highlight by the company. So they've given guidance for FY25, wherein they're expecting revenue of around 14,000 crore. If you see FY24 revenue is around 11,000 crore with EBITDA margin of 19%, and the EBITDA margin for FY24 is 10%. So they're going to go back to their normal EBITDA margin. PAT margin is expected to be in double digit, while R&D investment is expected to be 7% of total sales, and they're going to do capex of almost 700 crores, and they've received cash by stake sale of Glenmark Life Sciences, wherein if you see the cash is around 5,000 crores, wherein they're going to pay debt. So they're going to beat net debt by FY25. Lastly, we have Aurobindo Pharma. Good set of numbers. Revenue was up 17%. Margins were 22% versus 15%. US formulation revenue increased 21%, and their API revenue remained flat due to the pricing pressure that we are seeing. But they did get official action indicated from US FDA in one of their facilities. That's the reason we are seeing pressure in Aurobindo.
Okay, thank you so much for that, Varsha. We'll slip into a very short break. We'll break those stocks down a little bit more on the other side. Stay tuned. Welcome back. You're watching India Market Close here on NDTV Profit. I have with me both our guests, Aditya Shah and Hemen Kapadia. We're going to talk a bit about the pharma counters. And Aditya, we've just had a breakdown from Varsha with regard to what's happened in each of those counters from a fundamental perspective. So let me come to you first. Divis 4% higher. You're seeing some pressure on Aurobindo. Talk to us about both of these, and especially with regard to valuations, because every single analyst on the street seems to be flagging valuations where Divis is concerned. They're not comfortable with the valuations, even though the numbers are a strong beat.
So Harsh, if you look at the performance of DVs, the numbers were really good in the sense that the recovery that the company has posted from its FY24 slump is really very good, and the custom synthesis business is starting to make a comeback. So in my opinion, this will continue over the next 1.5 years, and sequential recovery is what we will see in the coming quarter results. The margins will continue to stay here in the band of 25 to 35%. However, the new orders and the Kakinada facility will start to help the company. That's the first point. Second point, of course, since DVs is an integrated player, the quality of DVs cannot be matched by any other company, not only in India, but in the entire world. So DVs will continue to remain expensive stock. There's no doubt about it. If anybody wants to make positions, 23 and 24 were great opportunities where DV stock had slid below 3,000 to accumulate DVs labs. DVs will continue to remain expensive, and I will suggest that you accumulate the stock in small quantities so that you have exposure to this good company. First point. Second point is, then let's come on to the other pharma companies. On the other pharma companies, we are seeing a little bit of pricing pressure coming down in the US generic space, where all the companies have reported very good numbers. However, we don't have any evidence which suggests that this pricing pressure will continue to abate and the companies will perform really well. So in my opinion, we should stick to the API companies like DVs or Laurus, or the CRAM CDMO companies like Syngene, or companies like Piramal Pharma, which reported really very good set of numbers. Or then we should move on to the diagnostic space, where we've got companies like Krishna Diagnostics, we've got companies like Thyrocare. Those are the companies that you should really watch out for. I'm very positive on pharma in 25. These companies should start to perform really well over a period of time. But having said that, we should be mindful that pharma is a very company-specific sector, and you should watch company by company and then take a call on which stock to invest.
Aditya, no concerns with regard to valuations before I go to Hemen very quickly?
Yes, as I said, companies like DVs will continue to trade expensive, and there's nothing that we can do about it. But I would want to have a company like DVs inside my portfolio, because the products that they are coming out with are highly niche products, and therefore they will continue to do really well over the period of next 3 to 5 years. So yes, valuations are expensive, so you need to stagger your investments up.
Okay, point taken. Hemen, with regard to some of these pharma plays, real buzzers in trade today, what should one do? And what should the trade be like going forward?
But I'll just take 30 seconds of yours for the pharma index. Actually, first 17 weeks and counting. I mean, that's a long time, especially in a rollicking bull market like this. 17 weeks and counting, and we still haven't broken out. Yes, stock specific, there have been most thing you mentioned, DV's lab. So 19,400 needs to get taken out for a humongous pharma move. Yeah, and there have been like popcorn stocks have popped up. Coming back to DV that you were mentioning, we had a consolidation phase, which was almost 9 months old, between 3,300 and 4,100. And now DV has broken out of this range and we're gone here. I believe further upside seems possible. So it's extremely script specific, because the sector itself has been one of the earlier movers, has done well, but currently stagnated. So absolutely script specific for the timing, and I believe results would guide or shape the contours of individual stocks of how they pan out. Overall sector doesn't look bad, but till this breakout doesn't happen, and if it takes too long to happen, and if by some reason the market go to cool off, then it would probably fall under its own weight. So currently it's positive. neutral to positive. It's stock specific.
A bit of downturn for that Nifty Pharma chart, but I actually want to pull up the Nifty chart and you can see the swing coming in. So about 150 points off its day's high point. Still, I mean, pretty much flat if you look at it from Friday's close. So nothing really alarming there. But you have seen a fair bit of fall from the day's high. Those are your top contributors, and let's see where the pressure is coming in from. And of course, it is RIL to some extent, which is facing that pressure. ITC also weighing down, and Harsh, I know you're going to be speaking about ITC in some detail later on, so that's been a bit of a disappointment perhaps. We should pull up the mid-cap and small-cap indices as well and see if the broader markets are also facing that kind of a pressure. Even Bank Nifty off its high point of the day, doing okay, but still under a bit of pain at this point on the Bank Nifty. So you're seeing that pressure coming in. I'm seeing even the Nifty CPSE taking a bit of a tumble right now from at least where it was. And remember, the public sector stocks have been the darling so far. ONGC and NTPC weighing quite heavily, apart from a BEL, Power Grid, NLC, all of those seeing a bit of profit booking this afternoon. But let's talk about two specific stocks which have had a good day. I want to see what's happening to Ashok Leyland. It was as up as 7% when we started. Yeah, that's rock solid, 7.5%. So Ashok Leyland has reported its quarterly numbers. Company's Q4 PAT grew 20% while revenue slipped 3%. Puneet joins in with what really worked for the company this quarter.
Well, thanks for that. So you rightly said the revenue was largely flat, by 3% fall compared to the previous year, but the EBITDA margins grew by roughly 25%, which led to a beat in the full year EBITDA of roughly 12% compared to 8% which came last year. Now, apart from that as well, the company's commentary, as well as when you look at the segmental performance, all divisions that the company operates in have been doing really well. The LCV market share has grown up by roughly 5.8% when volumes of the industry have actually fallen. The company also said while speaking to us earlier today that they have gained market share and they've taken the number 2 position in this LCV space where they operate between the 2 to 3.5 ton. One key highlight from the results were also the redesignation of the current CFO, Mr. Gopal Mahadevan, to Director of Strategic Finance as well as M&A activities going forward as well. This will be very key. They will be looking at how to boost up the subsidiaries as well as take forward M&A activities in this particular year. And when we look at the volumes are roughly flat, but the LCV market share, as we spoke, was one of the key things. Now, brokerages have also agreed with the same. MK has a buy call with a target price of roughly 250 rupees per share, which is roughly around the price range, roughly around 10% gain from the current levels. Now, the upcycle potential, according to MK, is big for the next 2 years for the company. Generally, the truck cycle is of 4 to 5 years, and we are currently in year 3, according to them. They also said that the CV cycle this year has more seen like a time correction, and this buyers should come back in this particular couple of years as well. While pricing power will be in company's hands, and there won't be any kind of discounting, as the company is also alluded to. So overall, good strong show on margins as well as good commentary for the next year by Ashok Leyland. Back to you.
Okay, Puneet, stay with us because the other one that's buzzing is Exide as well. This one has done extremely well over the last, almost 24 odd months. Puneet, give us perspective on the Q4 numbers because the stock is up nearly 4%.
Well, one thing is that, the Q4 numbers were out slightly earlier this month, but the company held the conference call yesterday on Friday, and, brokerages have also come out with reports. Now, there were two key things that the brokerages spoke about. One was the partnership with Hyundai, which is a key validation of the technology that Exide has been investing in. They've roughly invested 2,000 crores over the past 2 years, and are expected to invest a lot more over the next 12 to 18 months as well. The second thing is the different segments markets apart from the passenger vehicles that they operate in. Now, we look at what Motilal is saying. They have maintained a buy, but they see their valuations are slightly higher. But the fine print of the management commentary as well as what they think is key, that over the last 3 years we've seen the industry has been really strong, and they are banking on replacement demand, which is going to come in the next 12 to 18 months as one of the key triggers for Exide. The other segment, which is not much talk about, is the industrial segment, where batteries are powering the data centers. Now, we've seen data centers the biggest boom over the post-COVID that we've seen, and going forward also, this is going to be a key theme going forward, and companies like Exide are going to be a key beneficiary of this. The industrial segment also has a power backup, as we said, which is another segment that Exide operates in, which is going to be a really big positive. And exports is one of the other key things that the company has said that they will be focusing on, and will see stronger traction going forward as well. So, not just limiting to car EV batteries, the company has been talking about the different segments it's operating in, and brokerages have given it a thumbs up. Back to you.
Okay, so two very interesting developments in the auto space, keeping both of those in focus. Let me come to you first, Hemen, with regard to how the auto space is evolving, and it's seen a very strong rally, right, over the last 6 to 8 months. What's the sense now? Is it time for a pause on charts broadly on the benchmark itself, the Nifty auto, as well as which are the specific counters which you would keep in mind?
Oh, 17 months of a one-way move. It's okay, fine. Markets are always right. But 17 months of a one-way move. And if I were to digress a bit back in time, since 23rd March 2020, when the Nifty Auto Index was 4,452, we're at 24,000 today. Okay, we're currently 23,894. So 4,000 to 24,000. Massive. Okay, 17 months one way, but like you said, currently, Harsh, there aren't any clear signals of any weakness coming in. Overbought, yes, if it moves like this, it's obviously going to be overbought, but no negative divergences yet, and no levels breaking. So I would be positive, but logic says if you are making some money, better to take something home. If and when the market corrects, you need some liquidity to pump in, and it's better to book some profits. But besides that, there is no technical evidence yet, at least as far as today, things might change in a jiffy. Till today, absolutely nothing to say that we are running out of steam and that we could correct. Not yet, Harsh.
Okay, thank you so much. Aditya, let me come to you. The largest CV maker suggesting that there will be a slowdown FY25, Tata Motors, stock took a tumble. Ashok Leyland, pretty confident that CV will hold up in FY25. How should one look at these divergent views, and how do you look at valuations between the two? Was Tata Motors slightly overheated in that sense, in your view?
So Harsh, I believe that the CV cycle will continue at least for the next 2 to 3 years. Why do I say so? Because the major users of CVs, be it the capital goods sector, be it the infrastructure sector, or be it the cement sector, all of those sectors are going to get a push on. And when the current government comes in, the government is going to spend really very aggressively on those sectors. So if the economy does really well, the CV sector also needs to do really well. The CV sector moves in tandem with how the economy is really doing. So in my opinion, the CV sector will do well at least for the next 2 to 3 years. Tata Motors stock really took a beating because the valuations were extremely heated. We all remember that Tata Motors once used to trade at about 300, 400 rupees. And from there on, the stock has come up above 1,000 rupees. And it has got a market valuation even higher than Maruti, which has got about 50% market share. So it was just a simple case of valuations being too aggressive on Tata Motors stock, and that's why it took a correction. Similarly, Ashok Leyland itself is not really cheap. It is also expensive. It is a very good company. However, valuations there also are extremely expensive. Within the auto space, I'm really positive on the auto space. The auto space still has a couple of years of legroom available. And I would like to look at some auto ancillaries such as Sona Comstar or Motherson Sumi or those kinds of players, who are agnostic to EV and who supply components to EV. Those types of auto ancillaries are really very interesting to look at.
Okay, so plenty to take away from that, as well as plenty happening in the auto space. But time to slip into a very short break. On the other side, we'll give you, of course, the latest with regard to what FNOQs are suggesting, as well as top buy today, sell tomorrow recommendations from our analysts as well. We'll slip into a short break. More on the other side.
Welcome back. Nifty now below the 23,000 mark and a bit of selling pressure coming in there, 22,936. Not massively in terms of a dip. Yes, from the day's high, if you look at it that way, then it has been quite a hit. Same for the Bank Nifty as well. But what is really pulling down the markets, I would say, PSUs. That sharp up move we saw in PSBs, that is public sector banks, also getting tempered to some extent. Agam is standing by with all the FNOQs now. Agam, are you seeing any reasons or signs of nervousness?
Nothing specifically, Tamanna, but we must remember, and as you've already mentioned, that the VIX is substantially higher today, up by as much as 7%, well over the mark of 23, and that perhaps also means that the sharper moves, about 50 point, 100-point move on the Nifty, is something which will become common over the course of the next perhaps one odd week as we move into the outcome of the elections. There's going to be a lot of dances, and that will involve a little bit of pain as well on the way, while it also, even as the benchmarks start to perhaps factor in the outcome of the general elections. Now, it's anyone's guess as to where we eventually end up this coming Tuesday and closing at 3:30, but I reckon that while that time, that particular spot has been kept in mind at the moment, and in between there's going to be potentially a lot more choppiness coming in. And that is exactly what we're seeing right now, and the Nifty is flat at the moment. We did give up on a lot of the gains. In fact, at one point in time the Nifty was up around as much as 0.5%, but that's gone. In terms of change in open interest, today is the day where traders say no, we will not see any more positions building, at least in today's day of trade. Let's pull up the Bank Nifty and see whether or not there has been a change there, where in fact there's further unwinding as far as the Bank Nifty is concerned, even as the Bank Nifty advances higher by around 0.7%. Remember that Friday is where we did see a lot of unwinding even as the index moved higher, and today it's no different. In fact, we're seeing more and more shorts from the earlier times unwinding further. At some point in time, perhaps we will see a little bit of a break and a lot more volatility coming into the banking index, even as it tries and tests 50,000 on the higher end. Of course, at one point in time, we were less than 1% away from that mark in today's day of trade as well. Now, let's talk about the options market. And again, on expected lines, perhaps we will have the most amount of activity around the 23,000 strikes in today's day of trade, where we did see a lot of more traction between 23,000, 23,100 calls as well as puts. But in terms of your overall open interest distribution, we continue to see more both calls as well as puts being written around the 23,000 strike for the 30th May expiry. And of course, that said, we're going to continue to keep an eye on the 6th June expiry as well. The picture there isn't very different either. It is the 23,000 where we have a substantial amount of both calls and puts written, while on the either end, the 500-point end of the specific mark, 22,500 puts and the 23,500 calls being looking at substantial open interest distribution. Now let's talk about stocks, and a lot of reaction on account of earnings as we move into the final few days of the earnings season. But shorts for Sale and Alchem Laboratories, longs for IndusInd Bank, Glenmark Pharma and Chola Fin. And in terms of stocks which are seeing unwinding, a lot of short covering for IGL, Persistent Systems. M&M Financial, of course, is now looking at a little bit of red, so we are looking at some longs unwinding there, as is the case for Berger Paints, Naveen Florin looking at short covering. But all in all, a mixed day of trade, and volatility has been here, and it's not going to go anywhere, at least for the next few days.
Okay, thanks for that, Agam. Let me go straight across to Himen. Himen, what's your sense? Clearly, volatility is your sense as well. Volatility here to stay for the next week or so at least?
Absolutely, Harsh. I think I started the show with Tamanna when I said 23. In 2019, we went to 29. In 2014, we went to 39, Harsh, in terms of the VIX. So there is headroom for the VIX to go up. And like Agam mentioned, VIX at this level, it's going to be choppy and weekly, monthly expiry. So it sort of adds to the mayhem. So yes, it is going to be volatile. It's going to be unpredictable, and it's going to be not too much of sense. And yes, anything but a smooth ride. And yeah, 5 laws of gravity would have to catch up some point in time. So it's not as if it's the end of the world, but yeah, somewhere these jokes are going to get more pronounced. I think Agam summed it up pretty well.
So, okay, some uncertainty coming in, but you could also look at this as an opportunity. Aditya, would you see it in that light? Because, for the last, I think, at least 5 or 6 sessions, everyone we speak to keeps talking about buy on dips, buy if you get an opportunity. I mean, the fact is that crack has not even taken place. What would be on your list when the timing is right? What would be some of the top companies that you're looking at?
I have been always optimistic on the market, and if there's a correction, I would like to buy the large private sector banks, or being a contra investor, try to look at the chemical space and the pharma space. Those companies have started to bottom out and report really good set of numbers. Having said that, I would stay away from the PSU pack and the defense pack. They are really very overheated. Some parts of the capital goods space also look very overheated. You must remember the order book and the revenue guidance of all of these companies are really strong. However, the execution is what really matters, and it will come over a period of next 3 to 5 years. So some places where you should be looking at the financials, the large private sector banks, or the AMC and the insurance space. some bit of FMCG. Also, you can look at the QSR companies or the chemicals and the pharma space. They look really very interesting. However, those companies are individualistic companies, and you need to study company by company and then take a call.
Okay, okay, Aditya, thanks for that. Let's try and talk about the PSU pack if we can, Aditya, while we are at it. What's in store? Because what we are expected to see is hopefully more policy certainty. At least that's the initial sense as we approach the 4th of June. Is that one pocket which you would be keen on in terms of an opportunity at a time just before election results?
So all the PSU pack, each and every company in the PSU sector has rallied dramatically over the last 6 to 12 months. Now the government needs to start delivering in terms of divestment of PSU companies, divestments of some PSU banks like IDBI Bank, and going forward, it also needs to sell some shares of PSU companies like IRFC, like LIC as well. PSU companies do not provide any margin of safety as they did back in 2020, 2021, when the valuations.
They will try and get him back and talk about, I just want that word of divestment. I don't know if that's still an ongoing story, honestly, Harsh, because from everything that the Prime Minister said to us, with the way the NDA government for 2 terms has been looking at public sector enterprises and not just banks, all of them, they don't seem like they're in a real mood to divest anything. The idea seems to be, let's run it, let's add value ourselves.
Yep.
So for the time being, anyone holding their breath, waiting for divestments or, any kind of stake sales might have a bit of time to wait.
Yeah, it's a big shift in policy, right? Because
completely
we've always heard them talk about divestment, and now it seems that they're starting to talk value, and therefore there's been this big shift, and that's probably changed investor perception as well.
I would say it's a bit of both, right? The kind of investor perception and the kind of value these stocks have created. If ever you are an owner of an entity, like the government is right now, several companies in the market, this is the best time to sell a stake if you want to, because you valued so well. But there doesn't seem to be any intent to. So I'm not sure if that's going to happen. We'll come back to Aditya on that point. But meanwhile, we're shifting focus to Nazara Tech. The stock has been buzzing today as its promoter, Mitter Infotech, sells 6% stake in the company. Mahima joins us with the key details. Mahima, what's happening with Nazara? Why this stake sale? What do we know?
Right, Tamanna. So I'll start by saying that around 48 lakhs of equity was transferred to Plutus Wealth Management, which has already been an early investor in Nazara Technology. At present, Plutus Wealth Management holds around 6.63%, and now post the stake sale, it will hold around 13.01%. Well, the reason given for this is to improve the liquidity of the company. Well, overall, if we see, Nazara Technology also came out with its Q4 recently, and just to see, the revenues were down around 29%. EBIT loss has almost doubled to 58 crores from 21 crores. Net profit has been insignificant of almost 0.2 crore versus 29 crores, so it's down almost 100%, and it has some kind of loss of 17 crore from discontinued operations. And overall key highlights that the results gave were that the gross gaming revenues have only seen a slight decline, although in terms of management guidance, the management has said that they expect a strong revenue growth from July 24, and this is on the back of new features and gaming formats that they are bringing in. They've also said that they're focusing on incentivizing players to play more with deposited funds rather than withdrawing and then redepositing funds, because they have to pay a higher 28% GST on this particular amount. And lastly, they've also mentioned a scheme of arrangement where they're saying that they will either merge or close down certain entities that do not align with their future goals. Like they would either close or demerge Nazara Bangladesh and NZ Mobile
Nigeria, and they've also said that it is in process of divesting in subsidiaries like Nazara Kenya, Digital Entertainment and Sports Unity. So these are various reasons as to why the stock is buzzing in trade today.
Okay, Nazara, again, very interesting. The stock is up and away, promoter stake sale, but stock up 11% now. Can we have your views, Hemain, on this one, if at all you can give us, and if you do track it, what do you do with something like a Nazara up 11% today?
I would definitely not add more, Harsh. But if I have a position, I mean, there's no question about holding it because it's had a protracted decline, 990 to 600. And now we are seeing what is technically an upward bar reversal. Could be closing above the 55-day exponential moving average today, Harsh. Obviously, volumes and the oscillators have given a crossover buy. So I believe a short-term bottom has been made. And at the risk of sounding a bit optimistic, I believe a medium-term bottom has been made. It could remain a bit flippant until it closes 713. That's when the medium-term technical green shoots should start emerging. But I think this whole move from 990 to 600 is over. And we've sort of formed a base. And now we should take it up from here. So I would be clearly positive, not negative. Yes, if for some reason we come back and close below 620, then all bets are off. Whatever we discuss doesn't hold meaning. But I don't think that looks like happening. I believe it's around the corner.
So Nazara is an exit at these levels is broadly what Heyman is saying. Heyman, since we were talking about PSU banks, just I want to pick up an IOB and a UCO on the charts. 11.5% and 7.5% respectively up today. IOB 11.5%. Any take over here on what to do right now?
If we didn't have the election results next week, I would say go long, Tamanna, because they reform bases. It's not that it's been, okay, if we take a UCO bank, Tamanna, this is the 4th month in a row where it's been corrected, time and price. From 70, it came down to 47. We moved sideways, formed a base, formed a rectangle. Now we're breaking out. So frankly, it's been a structured move. It just hasn't been very airy-fairy. And if I look at IOB, I think it's the same thing, Tamanna. So it has been a very decent move and has formed time price retracement. So I would say they look good. Buying fresh, I would be more happy telling you this on next Tuesday. But like you said, the exit poll results would anyway dictate market movements next Monday. So once again, if the event risk is not on top of the head, both of them quantify as a buy, Tamanna.
Now, it's all about the event though, isn't it? And I'm going to come to you on your BTST in just a second, but there's an interesting piece that Harsh has, and we're going to that right now. Now, ITC has been in the news after their numbers, not a great reaction and not great numbers as well. Today also in the news because of an advisory group now telling shareholders, or advising shareholders rather, not to vote for the demerger of the hotels business. Now, while that story continues, Harsh, tell us about your deep dive on ITC's financials.
Well, absolutely, Tamanna. This has been meme stock 2020 to 2022. It definitely wins the title for that, but it's also now given zero returns in the last 1 year or so. So let's try and understand what exactly currently is the status at ITC in terms of just numbers. Look at the market cap, 5.5 odd lakh crore, revenue of 75,000 crore in FY24, PAT of roughly 20,000 crore. So trading at roughly 27 odd times in terms of price to earnings. But let's talk a little bit more about the business as such itself. Just in terms of how the business is lining up, you've got cigarettes and FMCG as the primary drivers of the business. Some more metrics coming out in front of you. You've got cigarettes and FMCG as the primary drivers of the business, and cigarette roughly contributes, those are all the businesses, but those two are the key because they contribute roughly 70 to 75% of the top line and nearly 90% of the bottom line. And that is clearly the biggest driver in terms of stock price performance, which is profit after tax. And therefore, we'll focus on those two businesses specifically, right? In terms of cigarette itself, cigarette contributes roughly 45% to top line, but 81% of profit after tax. In fact, every 10 rupees of cigarettes purchased and smoked actually contributes to 4.5 rupees of profit after tax for ITC, and thereafter translates to 4 rupees of dividend to shareholders. So keep that in mind, because cigarette is really the business which ITC has thrived on and continues to thrive on. And that's also what the advisory group states. What they're suggesting is the investment into hotels and hospitality will likely taper or stop if and only if ITC completely dissociates itself from its investments in the hotel business, which is not happening under the current structure. But on the flip side, ITC has also committed no fresh investments to hotels, and therefore that's possibly a non-starter or possibly completely irrelevant if at all ITC does not invest more money into hotels from the cigarettes business. Now, in terms of where FMCG is concerned, sales to revenue around 20 to 27 odd %, but the profit after tax has gone up substantially, 2% only of PAT in FY19 to 5% in FY22 to now 7%. So these are possibly the two businesses that one needs to focus on. Currently trading at 27 times. Analysts on the street, 90% have a buy rating with a target price of 500, which is a 15 to 17% upside, including dividends, 15 to 17. Otherwise, just about a 14.5% kind of an upside.
All right, interesting deep dive there. Aditya, very quickly, any view on ITC and on the hotel business part of it?
I'm very positive on ITC, and I see that the hotels demerger business will unlock a lot of value for the company. We've seen the Taj Group, the Indian hotels, see a massive re-rating over the last 3 to 5 years, and ITC is also a business that is similar to what the Indian hotels business really is. So this demerger is a good and a positive step for the company, and I remain positive on this stock.
Just a couple of minutes to go. Any BTST calls him in?
I'd say STBT on Birlasoft at the current level, which is 634. Stop loss 660. Stop loss 640. Target 620. Risk reward ratio 1:2. That is a STBT on Birlasoft, a BTST on Dr. Reddy Tamanna, because I feel the markets are going to be slightly lower tomorrow.
All right, STBT on Birlasoft. You're saying it. We will see movement tomorrow. Thank you so much, Hemant. Thank you so much, Aditya, for joining us. Let's just wind down where we're headed on close, and we'll pull up first the line graph on the Nifty. So off its highs, we're looking at a flat close on the face of it, but this flat close is perhaps hiding the volatility of the day and the swings of the day, which this chart actually will show you. Look at that dive that the index has taken towards the closing point, nearly 150 points off the day's highs, which was mid-morning. So you have seen a turn in mood in that sense. I want to pull up the India VIX very quickly and just take a look at what's happening there. So the India VIX up about 7%. You've seen that really adding some of the volatility or displaying some of the nervousness perhaps in the market. Let's come to the advanced decline ratio as we wind down and just get a sense of where we are closing off. That gap widening and the declines to advances also widening as we go into closer to 330. And really, if you pull up the heat map, you'll get a sense of what has been pulling the markets down today. I mean, the big hero of the day continues to be Divi's off its highs. It was about 4.5% at one point, so 3% up now. Adani Port still doing okay. Indocent. HDFC Bank has come off. HDFC Bank has come off its highs of the day. Should we just quickly pull up the HDFC line graph before we go into the top losers on the heat map? Adani and Wipro, Grasim continue to be there. Yeah. So here, in a sense, if you're looking for a culprit of what has happened today, HDFC Bank perhaps tells you some of the story. It's still going to close in the green, Harsh, but definitely off its day's high. So that is one part of the story. Let's quickly go back to the heat map before we hit the broader markets and that story there. On the losing side, an ONGC, NTPC, Coal India. So some of those PSUs.
And the Reliance, a big contributor to...
in terms of weightage, definitely.
To the weightage. Even though it's just down 0.9%, that contribution there is what is
You reckon this
causing
Africa foray has maybe not excited people too much? I mean, it's been a challenge for Bharti Airtel as well. So maybe that's part of the story.
Possible, but the slide hasn't been substantial. It's just been slightly off. We can pull up the graph for context.
ITC is another one because,
Yes.
we talked about ITC today. You did a deep dive there, and that stock, again, seeing another day of pain. So that's the story as far as the indices are concerned. But even in the broader markets, you've seen stocks coming off the highs of the day.
Yeah, we've seen quite a few stocks coming off, but let's pull up. So there you go, the Nifty mid cap. It's held up though fairly well. Let's also pull up the advanced decline for more context, just to try and understand what's happened. Even the small cap indices as well as the mid cap index has held off quite well. But you can see a slight bit of slip here.
Yeah, I just pulled that up. So advanced decline is showing that on the broader markets. But to be fair, even when we started and the Nifty was holding up, the declines were further than the advances.
Correct.
So it seems like a couple of heavyweights which have actually dragged down the markets.
Correct. Which is likely HDFC and Reliance. But that's all the time we have on this edition of India Market Close. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.